Rupert, what's your view on the US for the second half of the year?
I think that it is really a view of continued growth. We've definitely seen a stabilization of the US labor market at the margin that was potentially showing some signs of weakness a few months ago, but that has certainly leveled off and steadied. You're seeing this capex impulse in the US broaden out a little bit. You've got this big impulse from AI, but actually more broadly in capex, you're seeing a little bit of a driver there. But at the same time, that sort of upwards inflection in the US economy driven by capex is still very narrow. We are not seeing an upwards inflection coming from the housing market or from the consumer. If anything, housing remains very depressed, and we would expect consumption growth to continue slowing down. You're actually seeing US consumers now experience negative real income growth and very, very low savings rates. So there are some downside risks medium term to consumption there. So that is, a kind of capex driven upturn, but potentially quite narrow, and therefore driving kind of trend like growth, and a Fed that is going to be on hold, in our view, waiting to see what happens with energy prices, but also with the AI cycle.